Okay, Monday, August 3rd. This is the Anderson Report. I am Tim the Source Anderson. This is my YouTube channel, The Anderson Report. And I want to thank everyone for watching. If you have not yet subscribed, please hit the little red, please hit the subscribe bar on my YouTube channel page. And if you want notifications of when upcoming broadcasts will take place, hit the little bell next to it and you will get notifications through your favorite messaging service, email, most likely email, possibly text messaging, whatever you choose. Usually at 7 p.m. during the week. Occasionally we tweak that a little bit. But look, August has started off, the month of August has started off exactly where the month of July ended, with a very strong rally fueled by the big mega cap names in tech, which reported, four of which reported tremendous earnings last Thursday night. We had a strong final day of the month, although most of that move higher happened in the last 2 hours of the day on Friday. And then we had a strong opening out of the chute today, and stocks held on to most of their gains. The NASDAQ composite up 1.5%. That's 3% in 2 days. The NASDAQ did close at a fresh all-time high, just over 10,900. Actually, 10,902.80. The NASDAQ had significant resistance at the 10,820 level. We had mentioned it a couple of times. It could not be held back today. A new closing high for NASDAQ. The Dow Jones Industrial Average up 0.9% to close at 26,664. The S&P 500 was above the 3,300 level for on and off for periods of the time today, closed a little bit below it, up 0.7%. The S&P 500 went out at 3294 and change, just below the 3,300 level, less than 100 points from its all-time closing high of 3386. That would be from February 19th. And the Russell 2000 had a very nice day also, after being the only average of the four that we highlight to be down on Friday. The Russell was up 1.8%, outperforming even NASDAQ. The Russell closed at 1506.81. That's the second time in a week it's closed above 1,500. I believe there was an early June high, a little bit higher than that, maybe around 1518 or 1520. We'll see if the Russell can continue if its move, and if the small caps had a big rally that started maybe about 3 weeks ago. It'll be fascinating to see if we continue to see money going into the small cap world. Okay, so let's take a real quick look, since we weren't quite able to do a broadcast on Saturday. Let's take a real quick look at how the month of July ended. Friday was there was a lot of give and take back and forth during the day on Friday, but we had a very strong finish to the day, and we actually had, what's interesting to me is that we had the highest volume day of the month on Friday, on the last day of the month, a Friday in the summer. That's very unusual. Now, I do understand that there was some a few dozen additions and deletions and reweightings in the S&P 600 small cap index. That probably did add some volume to the day, but still, I talked to a number of people on institutional desks around the street today. Friday was a very busy day for institutions and institutional brokers. Very unusual for a Friday in July to be the highest volume day of the month. Now it was coming the day after we had the big earnings from those four big tech companies: Google, Amazon, Facebook, and Apple Computer, with Apple trading at an all-time high, announcing a 4-for-1 stock split, et cetera, et cetera. So for the month of July, the Dow Jones Industrial Average gained 2.4%. The S&P 500 gained 5.5%. The NASDAQ gained 6.8%. And the Russell 2000 gained 2.7%. A very good month, the first month of the second half of the year. And we noticed in the second half of that month some outperformance from the Russell. Maybe some people, some big institutional money saying, you know what? We know that the Russell's down still 11% year to date, but we just feel that a couple more weeks, battle through this coronavirus, and we'll start to see a lot of these small cap names start to do a lot better. Oil held $40. That's key. We've talked about it numerous times. You had some data also on personal income and spending. And that data is usually on a month lag. So even though we get it at the very end of July, this was June data. Personal income up 1.4% versus May, but still down 3.5% from where it was in June a year earlier. So these are usually sequential numbers, but then they also give you the comparison to the month, the same month a year earlier. Now, the savings rate still very high, emblematic of the fact that people are locked down. They're not spending money commuting to work. They're not spending money going out to events, to restaurants, to bars. The savings rate in June, up 19% versus the savings rate was 19% versus 24% in May. Coming down a little bit, but for the US, that's a very high savings rate. And I think you will see that a lot of people have also used the extra money they've had from not spending on travel, on even commuting, on going out to restaurants and bars. They've been paying down their credit card debts, the lowest level of credit card debt, I believe, since 2017. That's a positive sign, because that creates the potential for some pent up spending when we totally come out of this. Okay, so for today, we mentioned the Dow up just under 1%. Russell closing above 1,500. Crude oil had a nice day today, up over 1%. Crude oil at 40, spot 78. Crude oil had some shaky days in the last week, and I think it was positive, and energy was an underperforming sector last week. We'll get to that in a minute, but it was positive to see crude holding 40, even though it had some shaky days last week. Today, up a little bit, starting the week on a positive note, just about $40.80 for crude oil. Gold, up a little bit today, teasing us with that 2,000 level. I think this is a new daily high close for gold, $1,992 an ounce. Silver, up a little bit also, $24.50. Some of that crazy volatility where we saw silver trade in a 5% range back and forth once or twice a day. Silver now $24 and right around $24.50. We'll see if we get a reaction there if gold does make it through 2000. I would guess that when we get the final details of whatever kind of a stimulus 4.0 plan that we might have, that might be the day gold goes through 2000, just on the idea with a lot more government spending. Okay. And I think one of the things that sparked the rally in the last 90 minutes to 2 hours of the day on Friday was the fact that the House said that they were going to stay in Washington through the weekend and potentially try to have some more meetings on this impasse on stimulus 4.0. That gave people a positive feeling maybe in the last couple hours of the day. There could have also been a little month-end window dressing. Now, the breadth of the market was decent, not wildly positive, but advancers led decliners by 2-1 at the NYSE, by 2.5-1 at NASDAQ. A lot of news on the Microsoft potentially buying the US version of TikTok. I think although the Journal was reporting over the weekend that it was very, very close to being done, I think there are still a lot of difficult details to be worked out there. And apparently, in fact, President Trump even mentioned in today, in one or two different forums, that he had a conversation with the CEO of Microsoft and basically telling him that if he can separate the US version of TikTok from the Chinese ownership and assure the Justice Department that there is not information on users of TikTok in the US going back to the Chinese Communist Party, that the deal would most likely be approved by CFIUS, which is the committee that reports to the Treasury Department that looks over any foreign investments in the US. Okay, so we got one question here. Hopefully we get to 30,000. I'm sure that means Dow 30,000. Well, we're at 26,664. That's about 3,500 points away. We need a rally of a little bit more than 10%. It's going to be, look, we had a little bit of positive news on Boeing today. They've got some preliminary approval from the FDA on 4 key changes that they're making to the Boeing 737 MAX. We didn't get a wildly exuberant reaction to the stock, but it was up $5 or $6, given it's a $160 stock. That's a decent move. Would love to see the S&P hit a record. We're much closer to that for the S&P. The S&P being less than, being about 90 points away. The old record is 33.86. We went out at 32.94. So you're talking about 3%. Hey, the S&P 500 was up 0.7% today. We're within reach of 2 or 3 strong days for the S&P getting to a new all-time high. We would need significantly more than that from the Dow. We're 3,500 points away from getting to Dow 30,000. What was the all-time closing on? I think 29.5-ish. Okay. So Apple Computer, another new high today, 435. There, excuse me, couldn't hold that one back. I will also say that, okay, we had industrial, we had ISM manufacturing report today. It came out at above 54. So that was a improvement from the prior month. It's 2 months in a row that it's been above 50. 50 is what they call the expansion contraction threshold for the ISM manufacturing report and the ISM non manufacturing report for the services sector. There's also this group called Markit, Markit Economics, that puts out manufacturing numbers also. 50 is their threshold. If the number is above 50, we're in an expansionary mode. If it's below 50, we're in a contraction mode. We're in sharp contraction mode for the manufacturing index for clearly the month of April and May. And then we came out of that in June and in July. Although I will say, even though the ISM manufacturing report for July came in at like 54.3, I believe it was. That is nowhere. That does not. The manufacturing whole story in the U.S. is nowhere near as strong as it was because a lot of things are still shut down. Let's say a year ago, when the ISM manufacturing report was in the low to mid 50s. And the reason for that is this is a sequential number, meaning that it's measured off the prior month, which is registered off the month before that. So when we had our very, very sharp decline in with the self-imposed shutdown, and I think this is important for people to understand, the I think we got down to like 41, maybe even the high 30s on the ISM manufacturing report. That's a very, very sharp. That's a very, very, very low number. So then when we had we improved a little bit in May, and then in June we got above 50, and now in July we're even above June's number. We're a couple points above June's number, and we're at 54.3. But you got to realize that is expansion coming off the shutdown level of where we were in, let's say, March and April. Okay. Now, when you look at the details of the ISM manufacturing report, it'll give you 6 different broad categories. And I really hate to do this and turn on my computer, but I'm going to do it just because I want to give some specifics on it. The one caveat I have, especially going into the July jobs number on Friday, is that the weakest portion of the ISM manufacturing report, just bear with me a minute, was the employment sector. Okay. Now we're coming up to a July jobs report on Friday that's going to get a tremendous amount of attention. Now remember that we were on weekly claims. We were running about 1.3 million a week until 2 weeks ago. 2 weeks ago, we spiked up to 1.4. Last week, we were still at 1.4. Continuing claims had dropped from about 20 million to about 17 million. Expectations last were they were going to drop to 16 million. They didn't. They held at 17 million. So on the ISM manufacturing report for July, and you got to excuse me just looking away for a couple minutes, the new orders index went up to 61%. That's very good. Okay. But it went up from 56 to 61. The production index went up to 62% from 57%. That's very good, but it's coming off a very depressed level. Okay. The unemployment index increased to 44.3% from 42.1%. You see, that's the big problem still with the economy is employment. That's what has to improve significantly for the economy to really make its next move in terms of forming out that maybe a little bit of that V-shaped recovery with a little bit of a stall halfway up the right side of the V. The prices index increased to 53.2 from 51. That's positive. That shows a little bit of pricing power in the economy. Backlog of orders. Backlogs are always good for analysts that follow individual stocks. Anytime they see a backlog, like I'm sure they'd see a backlog for Logitech video cam, Logitech webcams right now. I've been, they've been totally sold out since everybody started working from home and streaming at home and doing work conferences on either Zoom or Microsoft or Skype from home. I have not been able to buy any Logitech webcam without paying twice as much as they really should sell for to someone who has a bunch of them in stock. And they still haven't got their production back up. They are backlogged. So if you're a company, if you're looking at a specific company and they have backlogs, that's usually a very positive sign. And new order exports, even the export index was up. So all of these indexes either went into the mid to high 50s or even the low 60s in terms of production, except for employment, which only got up to 4.4. That's of the 6 categories in the ISM manufacturing report. We got to get more people back to work. We got to get the school. We got to get the schools to open. We got to get kids going to the school physically, and we got to get people back to work. That's why I'm a little bit cautious about the jobs report on Friday. The consensus is for an ads of about, actually for ads of about a million and a half jobs. And I'm going to try to get a better handle on this over the next couple of days. We'll get a good leading indicator of it on Wednesday from ADP, because ADP will report their private sector job gain numbers on Wednesday. Okay. ADP, where the US jobs report is largely surveys when they first report it, ADP, because of who ADP is, a payroll processor, has hard data on tens of thousands of employers and hundreds of millions of employees. Okay. So they report their own numbers, and they're always a little bit different from what the BLS will report, but it's a reasonable indicator of what we're going to see on Friday. Even a month ago, when ADP reported, the number was like, wow, is that really the right number? And then the jobs number on Friday, I think, was even a stronger up number. So we'll see. I'm a little bit cautious about it going into Friday, but the estimates are for gains and for the unemployment rate to drop down to about 10.7 from about 11. I think it's at 11.3 or 11.4. Okay, so that's my wrap on the manufacturing report. It was a good report. It beat consensus, but just because it's got a 54 handle on it, it's not the same as it was the last time we were in the mid 50s on the ISM number. We'll get the services number in a couple of days. That'll be an important number to look at also. We had today the strongest sector, I'm sure you can guess, infotech, information technology, up 2.5%. That's your big mega cap growth NASDAQ names, just driving that internet traffic trade and still driving that those jobs numbers, driving that in the aftermath of their earnings on last Thursday. I was a little concerned about NASDAQ going into those earnings last Thursday. I don't know how specific about it I was on the Thursday night broadcast, but those stocks were priced for perfection, and they got perfection plus from Apple, from Amazon, from Facebook. Not quite as much from Google, but Google's fine. Okay. I mean, Google's going to be okay. Um, Now we'll just look if this rally, if this rally continues, I just be maybe if we have a strong day again tomorrow, or if we're strong, combination Monday, Tuesday, Wednesday, we got to look at the ADP numbers for on Wednesday, and then and we got to get a decent jobs number on Friday. It's not going to be as strong as it was last month. So let's just take a look for a couple of minutes at the strongest sectors. Actually, there's one other thing I wanted to mention before I forget. We had 130 new highs on the New York Stock Exchange today, new 52-week highs. We had 220 new 52-week highs on NASDAQ. Now, if that continues to build, okay, this is nowhere near being exuberant to the point where I feel like it's, the market's way ahead of itself. But in the past, when that number gets above 400, if it would have hit 500, 600 new 52-week highs for a couple days in a row, or 2 days out of 3, I would be cautious that then the market is a little overheated, a little ahead of itself, and due for a short to intermediate term correction. I certainly don't see that with 130 new 52-week highs on the NYSE, but I think that's the highest number we've had throughout this recovery. 220 new highs on the NASDAQ. That's, the highest, I think the highest number we've had. Just to go over a couple of them, 52-week highs. One that jumped out at me, Best Buy, only because I remember 10 years ago that everybody thought Best Buy would be the next one to go out of business after Circuit City filed Chapter 11. It didn't. It's figured out how to exist even with all the competition that it has from the online retailers. They sell, big heavy appliances also, not just stereo stuff and computers. Best Buy, 52-week high today. ADT, home security, makes sense. 52-week high. Boise Cascade, that's a paper company. A lot of packaging, a lot of boxes for people shipping stuff, ordering online. Chegg, that's the school supply company. Danaher, that's kind of an industrial. Very interesting to see Danaher on the 52-week high list. The current CEO has been with GE for a little over a year and a half, probably the right guy, is from Danaher. Generac, it's hurricane season, clearly, a big storm hitting the east coast of Florida, and going to work its way up through the Carolinas, and then we'll get a lot of rain in the Northeast later in the week. Generac, the generator company, 52-week high. A number of companies in the home building, home supply, either do it yourself at home and garden type stuff. Lowe's, 52-week high. Masco, building supply products. Trex, that's the outdoor, that's the synthetic decking company, 52-week highs. Salesforce, great story the last decade or so. Strum Ruger, a lot of stories about massive amounts of gun sales. Not surprising to see them on the 52-week high list. And of course, Apple, Microsoft. I didn't quite get to go through the whole NASDAQ list. I'm going to do that later tonight, and we'll talk about I'll highlight a few stocks. I'm sure you could guess what they are. They're the companies that are there, Apple, Amazon, Google, and the companies that supply the that are suppliers to the companies driving the internet traffic trade. UPS, I didn't see it on the list today, but it was up. I know it was up big. It was up 15 percent the day after they had their earnings last week. FSLY, you know what? I'm embarrassed because I don't know the name of it off the top of my head. But some of these internet security companies, I think, were on the list also. And that certainly makes a lot of sense with what went on with Twitter a few weeks ago. Fastly. See, I'm not familiar with that company. It's probably a NASDAQ stock. I'm going to highlight some of the NASDAQ stocks that have been on the 52-week high list tomorrow. Let's take a quick look in July at the leading sectors. I'm sure the number one performing commodity and or stock sector won't surprise too many people. It was silver, up 6% in the month of July. COMEX silver. Second place, S&P 500 information technology clearly got a final push on the last day after those earnings Thursday. Those are the companies driving what I've called the internet traffic trade. S&P 500 real estate, I think those are a lot of REITs. That could be a little bit of a search for yield and a little bit of a bounce off extremely oversold conditions. The NASDAQ composite, those were both up. S&P 500 infotech up 5%, real estate up 4%, NASDAQ composite up 3.7% for the month. I had a monthly increase of higher than that. I got to check that. Shanghai composite had a good month. I know it had one day when it was up 5%. Gold up 3.4%. Consumer discretionary up 2%. Telecom up 1.7%. Some of the losers, financials down 1%. It's a tough sector with rates continuing going down. Rates, I think the 10-year closed the month at 0.53%. It was up a little bit today. I saw it 0.56, 57%. I want to see that 10-year yield way about like back to 0.65, even much higher. What do I think of ENPH or for earnings tomorrow? Shucks, I'm not familiar with that one. Wells Fargo, way too much commercial real estate. Yeah, they're exposed there. There's no doubt about it. And they're still trying to come out of all the issues they had with their from 3 years ago. Well, you've got a lot of money in the market. I think that, look, you can always go if you think we're getting overextended and you're concerned that you don't want to see. I don't think we're going to have a drop down back to the March lows. We certainly could have a near-term or intermediate-term pullback at any point in time. I think it would probably be short-lived. But if you're nervous about it, you could always go a little defensive for a month or 2 or 3 if you sense that the employment issue is really a roadblock for the economy taking a leg. Gold tier 1 asset now considered riskless. Gold, they did reclassify gold as a riskless asset for the banks, not for individuals, but an unintended consequence of the way they rewrote a lot of the rules for Dodd-Frank, even though it was passed in 2010. A lot of those rules weren't written for another 2 or 3 years. And gold, I believe, is now considered a riskless asset for the banks, although really it had a minimal move until later. Some of the other underperforming sectors from July: materials down 1.8%. It was one of the leading indicators, and it was one of the leading sectors in June. I mean, that's a early cycle. Those are early cyclical names. Those are rails. They're and materials from paper, forest products, chemicals, stuff that's really heats up when you're starting to see an early cyclical upturn in the economy, which we had a little bit of that, no doubt about it, off the lows. We need another leg of it. Okay. Um, Eurostox 600. The EU did report their GDP numbers, I think, on Friday morning, either Thursday after the close or Friday. It would have been Friday morning. I think their second quarter numbers were not as steep as ours were. If you bear with me just a minute or two, I believe that the EU GDP second quarter, uh, down 12.1% versus the first quarter and 14.5% below where it had been in the second quarter of 2019. So they give you both the sequential from the prior quarter and from the comparable quarter the year earlier. Um, Look, I got to take people feel that the EU, a lot of countries there are 2 weeks, 2 to 3 weeks ahead of where we are with the virus, and that they've come out of it a lot. I think that's maybe one reason why the markets have some optimism, even though we had big flare ups in the big population zones, in certainly in South Florida, and mainly in the greater Miami area, that whole stretch, probably from the Boca area down to Miami. There's zillions of towns down there. Um, and in parts of Texas, parts of Arizona, and California, even some other areas. I think the markets are telling us that, look, if we're 2 to 3 weeks behind Europe, Europe has kind of come out of this a lot now. I believe that Europe has either started or said they're going to start their schools with uh, physical kids actually going to school whenever school starts in Europe. I'm not up on how they time that. Um, but if we're 2 to 3 weeks where Europe is vis-a-vis the virus, people feel that we're having a spike now. We're testing just enormous amounts of people. I think we've tested 50 or 60 million people in this country. And so we've got a lot of positive cases, but and we've had some flare-ups of very serious hospitalizations and deaths in some areas, not nearly to the extent as a percentage of the people that have been tested and that have tested positive as we had from the initial outbreaks. But the market is 60 million. I did see that number, 700 to 800,000 a day. It's a lot. It's a lot of tests. So if we come through this and we got to get more people back to work, we got to get this indoor activities, from restaurants to hotels to airplanes to travel to workplaces, congested workplaces, hopefully even to sporting events. We got to get people comfortable with a lot more closer to the way that life was. We're not going to get to 100%, but we got to take that next leg up for the economy to really take another leg up, to get a bunch more people back to work. And then we'll see the economic numbers start to continue to improve. One of the worst performing sectors last month, S&P Energy. Energy stocks had just they're having a tough stretch. Gasoline is down quite a bit. Driving has not accelerated maybe to the extent that people had expected. In fact, NYMEX gasoline down 7.6%, the largest decline of the month. I saw it at 210 in New Jersey. I think it had been 230, 240. Uh, Exxon, and I didn't do a broadcast on Friday. Exxon and Chevron did report their earnings on Friday morning. Their revenues were very much in line with Royal Dutch Shell. Chevron revenues down 65%. It's astounding. Exxon revenues down 70%. I mean, a big ouch. I don't believe either one of them has cut their dividend yet. Exxon, I think, yields over 8%. A lot of people think they probably should cut their dividend. I'm not going to give an opinion on that. So, you know, energy, a key industry globally as well as domestically. Oil up 1% today, $40.80. Let's just see how oil acts the rest of the week. Bike sales. I did see the story on bike sales. A lot of bike sales. Sure, look, if you don't need to commute to work and you're working from home and you want to ride, the weather's nice, it's the summer, you want to ride your butt, I can see why bike sales would have a surge here. About 6 million vaccine candidates yet. Is it okay for young traders to take risk? Sure, it's definitely okay for younger people to take risk, because if you get a little bit of if you take a little bit of a hit here and there. And now again, I am not a personal financial consultant. Okay, I'm not a stockbroker. I'm not looking. I've never been in the retail part of the business, but the book always has been, take risk when you're in your 20s and 30s, because if you get nicked and banged around a little bit, you've got your whole life to make it up. And on a long-term perspective, the market's going to go higher. Okay. Look at what the market did in the internet after the internet bubble in the early 80s. In the early 2000s. The internet bubble, it was crazy in 1998, 99. Valuations were just nuts. The NASDAQ got up to over 5,000. It went down to 1,200 in 30 months, from March of 2000 to September, October of 2002. The NASDAQ composite went down about 78%. So don't be complacent. Don't think that things can't go down as great as all these big tech stocks look now. Now, I'm certainly not predicting it. I'm certainly not saying, sell out of those names. You want some exposure there. NASDAQ made a new high today. It's just, but back in the internet bubble, we had valuations going on in that sector that were just crazy. We had companies that were coming out with IPOs that were just being valued at just ridiculous metrics. Okay. Then we had the global financial crisis. We recovered from that. So I'm kind of, this started out answering your question, is it okay for young traders to take risk? I would say yes, but try to understand the risk that you're taking. Try to have some appreciation for it. Okay. And just try, don't be complacent. Don't feel like we're just not going to go down. Do I think the unemployment needs to be extended? Well, I believe there was a proposal by the White House in conjunction with the Republican Senate, although there were some people that were probably leery about doing it. They wanted to have a 1 to 2 week extension. Might have another sneeze coming up. They wanted to have a 1 to 2 week extension of, excuse me, the total federal kicker of $600 per week, which ended last Friday. So I think if you were unemployed last week and you were getting that extra $600 kicker, you can still apply for it this week, and it'll still come through, but it'll be 4 last week. But they wanted to do a 1 to 2 week, very short term extension of that because they haven't got a deal yet. And the House Democrats turned them down basically because they just don't want. My feeling is they just don't want to do anything to help Trump, and they want to be able to say after the fact he cut the unemployment lifeline for these people that really need it. So they didn't even want to do a 1 to 2 week extension, which is what the White House was proposing. Is fintech the fastest growing sector going for? Well, certainly within all of the financial area, it is the fastest growing it depends on how you exactly define fintech. It's kind of a new thing within the last 5 to 6 years. I don't know that there are fintech ETFs to look at. There probably are. I'm not familiar with them. Bike sales, yes. Fed cannot raise rates. Well, they can't raise rates right now. Do I think the market really goes down if Biden is elected? Yes, I do think the market would go down. Is he really that bad for the market? I would think so, but I think it's because he very possibly would not be calling all of the shots. There's some very far left people that were key people in the Bernie Sanders movement that I think are going to be very involved in the Biden administration. And if he were to be elected, if we get much closer to the election and the polls are showing that he's likely to be elected, I would expect the market to get hit because it's possible you could see Elizabeth Warren as Treasury Secretary, and it's possible that some of his key economic advisors would be the pro-socialist people that were really strongly behind the Bernie Sanders campaign. The market would not like that at all. Renewable energy will rise with a Biden surge before election. I think renewable energy is the only thing hurting renewable energy right now is that oil prices are probably not going back to the mid to high 60s for at least another year. But so, and it's just the cost of production of renewable energy is ideally designed to compete with oil in the $65 to $80 or higher range. ENFM 70. I am just not familiar with ENPH. They report earnings tomorrow. Good luck to you. I'm just not familiar with that name. Okay, so we've kind of covered a lot. It's almost 10 minutes to 8. If anybody has any questions, shoot them in right now and I'll answer them real quick. I appreciate the support everyone gives this channel. If you're not a subscriber yet, please subscribe. Hit the little bell next to the subscriber bar to what's the best way to play the flight from democratic cities? I would certainly say that the real estate market is hot right now. I don't know what individual companies benefit from the real estate market. Possibly moving companies. Now, a lot of them might be a lot of local movers, might be private. But if you look, there's a tight supply of housing. I would think that the home builders and anything related to home building, home buying, and or the interest of people moving out of big cities into, for a lot more space and a little bit less chaos. Those stocks have acted well with mortgage rates right around either just below or just above 3%. I think they will continue to act well. Clearly this, so, home building, home buying, Are any of the big real estate operations public? I'm not really. There's might be a couple of them. I got to do a little bit of work on that. I'll get back to that maybe in a couple of days. But that's I think your play there. Um, so please, if you're not subscribed to the channel already, please subscribe. If hit that bell next to the subscribe button, you'll get notifications. Uh, the Anderson Report is the YouTube channel. On Periscope, I'm TJ Anderson 12. My Twitter handle is TJ Anderson 1. And I will have updates, comments on the market and on market activity that I see during the day as we get into the next week. There are some key economic things that are coming out. Will come every day. That's great. I appreciate it. Do I think markets could retest March lows? I really don't think so. I think those March lows were just really. I mean, that's you're talking 18,000 on the Dow. We're at 26,000. Look, never say never, but certainly not on the NASDAQ. I mean, it would take a long, protracted, it would take a Biden presidency with some of the crazies from the Bernie campaign in charge, I think, to retest those lows from March. All right. We will see you again tomorrow. And everyone, have a safe evening and have a good day tomorrow. I'll probably be on Twitter early tomorrow. Have a nice night.